Hello, greetings, and welcome to Dividend Blasters. This is our 25th video. This is a bit of a momentous occasion. Today's topic is hurry, these 5 investments are going ex-dividend in May. So what I've done is I've done an analysis of the 72 stocks that are going ex-dividend through the end of the month of May, and I've selected 5 for your consideration. Quick disclaimer, I'm not a financial advisor. Purpose of this video is for information and education. It reflects my own personal opinions. So please do your own research. Consult a financial advisor prior to making a financial decision. Now, having said that, I've been an independent investor for more than 30 years. I've invested in stocks, ETFs, real estate, precious metals, specifically physical gold and silver, and cryptocurrencies. But my passion are cash flow investments, and I love dividend investments, whether they're dividend growth stocks or dividend yield stocks or ETFs. And I'm sharing my passion with you. So, anyway, I will say this. Before I make a major financial decision, I pick up the phone and I call my own licensed professional financial advisor who I employ for their professional expertise. And I run my decisions and thought processes by them and see what they say. And usually we agree. Sometimes we don't. In the end, it's my decision because it's my money. And in the end, it's your decision. So, anyway, I would say take advantage of them, leverage their expertise. It's the prudent thing to do. Let's press on. Quick reminder, I did do a video a few weeks ago, video number 19, where I identified 8 stocks that were and are going ex-dividend in April. 6 of them have already gone ex-dividend, but I wanted to remind you of them if you forgot or if you haven't been able to move on them. Altria, ConocoPhillips, U.S. Bancorp, Realty Income, American Express, and Verizon. Those 6 have gone ex-dividend already. However, in my judgment, they're good investments. And if you miss the ex-dividend date, you know what? Get the next ex-dividend date. Get in before that. They're still good investments. And then the last 2, you do have some time to get in before the ex-dividend date and get a dividend this quarter. AbbVie, which is going ex-dividend on the 13th, as is EOG Resources, also going ex-dividend on the 13th. And anyway, feel free to go back and look at video 19. There's a little bit more of a deep dive there for you. You can take a look. Let's press on. All right, the first of the 5 I have identified, and not in any particular order, except this is the order that they're going ex-dividend. First one is Kroger, ticker symbol KR, a major food and drug retailer across the United States. They were founded in 1883. They're based in Cincinnati, Ohio. Trading at $48.52, market cap $34.8 billion. I do like that PE ratio of 10.78. It's a little more than just half of their sector median. That tells me that is a good value right there. Earnings per share is $4.50, more than 4 times the dividend per share. That tells me they got it covered. They can meet that dividend payment commitment to their shareholders. I like the beta. The betas are low, meaning that it is very low risk investment. And remember, when we talked about the beta, we're basically saying this is the level of risk or price volatility relative to the S&P 500. S&P 500 is 1.0. So this is outstanding. And it's approximately about the same as its competitors in the sector. A little bit less at the 60-month, a little bit more at the 24-month. But anyway, they're both very low. The dividend yield is a little bit lower than its competitors, 2.14 versus 2.55%. It's not a lot. The dividend growth rate is impressive. Okay, and in all of these, I'm looking at the 5-year CAGR, or compounded annual growth rate. 14.87%. It is almost 3 times as much as its competitors in its industry sector, which is only 5.29%. So that's what I like. And I've mentioned before in the past, I like to see a dividend yield of 2 to 3%. I like to see a dividend growth rate of 7, 8, 9%. And I'm looking to meet that 10% rule of thumb that I have. That's the hurdle rate. Um, of course, if the dividend growth rate is higher, that's even better. And when I see a fairly low dividend payout ratio, that tells me they're meeting that dividend growth rate easily. Okay, they can meet that commitment to the shareholders easily. Not a problem to grow that dividend growth rate. And as you can see, they've been doing it for 16 consecutive years. That is a decent track record, much better than its competitors of 1 year. They're a quarterly dividend paying company. They're going ex-dividend on the 12th of May. Payout date June 1st. Next one. Okay, Target. Well, most of us have heard of Target or have been in a Target. They're a very large general merchandise retailer. They sell everything. They sell electronics, video games, furniture, luggage, groceries. Um, you've heard of them. I presume you've heard of them. If you haven't, go to their website. And they sell through of their many stores, but also they sell online through Target.com. They've been around a long time, longer than I thought. They were incorporated in 1902 and they're headquartered in Minneapolis. The price is $165.58, and this price is of just last Friday, April 7th. Um, Market cap about 76 billion. The PE ratio, it's a little bit more than their sector median competitors of 1901. They're at 19.4, but it's about the same. Not more, really too much more. I do like the earnings per share of 853. It's almost double the dividend per share of 432. That tells me they got it. They're going to be able to meet that dividend payment commitment. The betas, the 60-month beta is a little bit more, just an eyelash more than the S&P 500, 1.02. It has come up a little in the last 24 months. It's 1.23, and it's more than their industry competitors in the sector. But let's take a look at that dividend growth rate, 10.97%. I do like that. And that combined with a dividend yield of 2.61%, that basically kills the 10% rule of thumb hurdle rate that we're looking for. That's more than 13%. And I like the fact that it's actually much more, the growth rate, than their competitors, 10.97 versus 5.29. Now, the dividend payout ratio is almost 66%. I'm fine with that, considering everything else I've seen. I typically like to see something between 20 to 60%, but here I think that this is a decent investment. I think that the dividend payment is safe, and I am impressed by the growth rate. And I really like the fact they are a dividend king. Okay, they've been paying an increasing dividend yield each and every year. They've been increasing it for 54 years. That is a heck of an accomplishment. And look at their competitors. Their sector median is 3 years. So no competition there as far as dividend increasing, and that streak is fantastic. They're a quarterly dividend company. They're going ex-dividend on the 16th of May. Payout date June 10th. Next one. Next one is Amgen. Well, Amgen is a drug company, and they discover, develop, manufacture, and deliver human therapeutics worldwide. They focus on inflammation, oncology, hematology, bone health, cardiovascular disease, nephrology, and neuroscience. Uh, they've got a lot of impressive drugs. I'm not going to name them all, but perhaps you've heard of Enbrel. It's used to treat plaque psoriasis, rheumatoid arthritis, and psoriatic arthritis. Um, and there's a long list of drugs. So they were incorporated in 1980, headquartered in Thousand Oaks, California. This is a little bit of a pricier stock. To buy a share, it's going to be $253.32. The market cap, this is a little bigger company, 135 billion. The PE ratio is less than its sector median competitors. It's 14.16 versus 19.86 of its competitors. Earnings per share is impressive, 17.89, double, more than double its dividend per share payout of 8.52. I do like the betas. The betas are low, 0.64 for the last 60 months, 0.49 for the last 24 months. Basically, the last 24 months, much lower than its competitors. Now, take a look at that dividend yield. It is more than double its competitors. It's 3.36%. And the dividend growth rate is very impressive, 10.76%, more than its competitors. And the competitors' 5-year CAGR is 6.45, which isn't bad. It's actually pretty good. But this is going to put Amgen at more than 14% between the yield and the growth rate. The payout ratio is in that nice sweet spot of 44%, falling beautifully in between 20 and 60%. They've had a dividend growth streak of 11 years, more than their competitors of 7. Quarterly dividend payout company. They're going ex-dividend on May 17th. Payout date June 8th. Next one. Aha! If you've listened to my videos before, you've heard me talk about Microsoft. I like Microsoft, and I can give you all sorts of wonderful detail on Microsoft if you go back and listen to my other videos. I would ask you to do that, but most people know what Microsoft is. They develop, they license, they support software, services, hardware, solutions. It's a global juggernaut. It is the second largest company by market cap in the world after Apple. And you've probably heard of some of their products: Microsoft Office, SharePoint, Teams, Skype, Outlook, OneDrive, LinkedIn. You've probably heard of their gaming, devices, the Xbox, and their search engine, Bing. And you probably heard in the news that they are looking to acquire the gaming company Acquisition Blizzard. That would be a real game changer for them, making them huge in the gaming sector, and also be a game changer for the gaming sector. And they are also an active investor in artificial intelligence, and they've invested, I believe, $10 billion in OpenAI, and that's the company that's developing ChatGPT. And if you've been following the news, in the financial news and the investment news, you know that OpenAI is in private equity now, and there's ways to invest in private equity. That's probably another video. I'll do that. But Microsoft's very active in that. So anyway, enough about the color commentating of Microsoft. Let's get to the numbers. Microsoft is not cheap. It is trading at $291.60. As I said, they are huge. Their market cap is over $2 trillion, $2.17 trillion. The only company bigger is Apple. Their PE ratio is a little bit higher than their competitors, 31 versus 20. But it's hard to actually name a true competitor of Microsoft. And so when I look at the PE ratio, I say, yeah, it is expensive, but who competes against them? I mean, they have different companies that may compete with different segments in their company, but there's really no one that truly competes with them on everything. So anyway, earnings per share is $9.37, and it's about about 4 times more than the dividend per share. So it's more than sufficient to cover the dividend. Now look at the dividend yield. The dividend yield is modest. It's less than 1%. I would love if they would pay a little bit more of a dividend. But, at the same time, this is a high-tech growth company, but it's also a dividend-paying company. And as you can see, they've been paying an increasing dividend for 18 years. This is truly unique. They are on their their path, if you will. I was going to say roadmap, but it's a path. I don't want to say glide path, but it's a path to becoming a dividend aristocrat. In 7 years, they keep increasing that dividend. They'll be a dividend aristocrat. That would be really something. So I understand why the dividend yield's a little low. They got a lot of research and development and a lot of innovation that they are working on investing in to keep moving forward. And this is a company that is on the move. So anyway, having said that, I do love that dividend growth rate. To me, that will make up more than the dividend yield. That puts them over almost 12% right there if you look at the two together. And if you look at the total return of Microsoft, what it's been the last 10, 20, 30 years, you're going to get appreciation, total return through price appreciation, as well as dividends. And you'll probably get a little bit more. You're really buying this. You're not buying this necessarily for the dividend. You're buying this to get ownership and maybe latch on to a great growth company and a great long-term investment. But the dividend growth rate is really quite spectacular. I like it. I like the fact that dividend payout ratio is less than 29%. The dividend payment is going to be very safe. It is safe, and it will continue to be safe for investors. You can see that they've been paying out increasing dividends more than twice as long as their competitors. This is a quarterly dividend payout company. They're going ex-dividend on the 17th. Payout date, June 6th. Next one. Tyson Foods. Well, Tyson Foods is a worldwide food company, and they have multiple business segments that they operate, and they basically do beef, pork, chicken, and prepared foods. They process live-fed cattle, and they fabricate dressed beef and pork into primal and subprimal meat cuts. They manufacture and they market frozen foods and refrigerated foods, including ready-to-go meals, sandwiches, burgers, Philly steaks, and so on and so forth. You can read more of this on the website, but you've heard of this, and they sell a lot of their foods through grocery store chains, so you've probably seen their product. They've been around a long time. They were founded in 1935. They are headquartered in Springdale, Arkansas. This is a decent buy. They are trading at $59.61. They have a $21 billion market cap. Their PE ratio is 14. Their earnings per share of $4.22, more than double the dividend share payout per share of $1.92. They can easily meet that dividend, continue to meet it. They have a growth rate, you can see, of 11 years. I do like the beta. 0.74 for the last 60 months, 0.52 for the last 24 months. This is a fairly safe investment as far as price volatility. The dividend yield is cool. It is 3.22%. It's more than their sector median. The growth rate is wonderful, 12.36%, more than their sector median competitors of 5.29%. Taken together, you're looking at 15.5% right there. I like that very much. I mentioned the dividend growth streak. This is a quarterly dividend paying company. They are going ex-dividend on May 31st. Payout date, June 15th. And folks, that is all I have. If you have any questions, feel free to leave a comment at the channel site. And I would kindly ask if you could smash the like button and smash the subscribe button. And feel free to share the video with a friend or a family member if you think they're interested. And I wish you a wonderful day and God bless. Till the next video. Take care.